Hey, what's up, everybody? It's Ryan and Casey for another episode of Massive Value. Today is really exciting for me because I have a long-lost friend I haven't seen in like 4 or 5 years, Jillian Sidoti. And what we're going to talk about is if you have a deal and you need to get money for that deal, whether that be a single-family, multifamily, you need $250,000, you need $250 million, you need a lawyer that can structure that deal, and that's what we're going to talk about today. So stick around. We'll be right back. Get your notepad.
Propelio TV is sponsored by Noble Mortgage and Investments, Batch Skip Tracing, Think Multifamily, CreativeCashflow.com, and Lifener.
Want to keep up with the latest Propelio TV daily? Be sure to subscribe and click that bell.
Hey guys, welcome back. We're really excited to be back. I'm personally excited for this interview because we're talking about money. For starters. But this is Jillian. Thanks so much for joining us.
Oh, I am so excited to be here. And Ryan and I have been trying to do this for a long time, and I had to get to Dallas because that happens to be where you guys are.
It's perfect.
Yeah, she's avoided me like the plague. I'm like, hey, you're in town. She's like, no, I'm too busy. Too busy.
Yes, okay, whatever.
Well, you sound like you have a lot of clients and you do a lot of work. So why don't you just give everybody watching just a quick bio about who you are and what you do?
Sure. I have been doing this since about 2007. Prior to that, I was a real estate investor myself. So I was a real estate investor. I was trying to raise money for my own deals, and I was doing it all wrong. And I figured out the right way to do it. When the last downturn came, I was like, okay, well, we got to get rid of all the deals. Well, I didn't say that. CEO of the company said that. I shouldn't be so, I shouldn't put myself in an elevated position quite yet. But so the CEO of the company got rid of all the deals we had. At the end of the day, we didn't have any deals left. So I didn't have a job. So I had a law degree, and I thought, I'm going to start practicing law. I'm going to teach other people how to do this. I'm going to help other people do it right. I'm going to help people do the right thing where I went wrong. And so I've been doing this since 2007, just helping mostly real estate entrepreneurs figure out how to finance their businesses with equity, not just the bank, because the bank sometimes doesn't do it. Your own money sometimes doesn't do it. And you need equity as other people's money, essentially, as well.
Right. And we're always preaching that's what you need to do. Mm-hmm. So.
Yeah, because normally people are thinking about they have a line of credit, they have hard money, but now there's this sexy catchphrase of crowdfunding, and I know that's kind of y'all's niche. Is that correct?
That's correct. Yeah, and crowdfunding is kind of a funny term, right? Because a lot of times we hear about I'm going to crowdfund like this car accident, which is like a GoFundMe campaign, right? And then you have crowdfunding for like a product or a service, but we're not talking about either of those things. Or like Kickstarter, for example, is a crowdfunding of a product or a service. We're really talking about equity crowdfunding, where there is an exchange of money in exchange for equity in a company, equity in a product, or equity in a building, whatever it might be. There is that kind of exchange. There's also debt crowdfunding.
So just to go down that rabbit hole for 2 seconds, because like if you are doing a Kickstarter or somebody does hit cancer or whatever, and you're donating. You're essentially donating money without any kind of return. You might get a CD, you might get a T-shirt, you might get a sticker, but we're talking about no, you want stake in the deal because you're doing this for financial gain.
Correct. Oh yeah, exactly. And so a lot of times what we find is that people don't really understand that's where I was. I didn't understand what I was doing. I was going out and asking people, hey, will you give money for our deals? And trying to raise this money only to realize there's this whole body of law that comes in.
One minor technicality.
Yeah.
Lawyer schmoyer.
Yeah.
So before we keep, and I know we have a ton of questions, and especially Casey, but like before we go down that rabbit hole, before we started the cameras, we were talking about like you're in college and you met your now partner, Jean.
Yeah.
If you don't mind, can you share that? Because I thought that was a good story.
Yeah. So I was at a class that Jean was teaching. Jean Trowbridge, my partner, he was teaching a class on how to like use this financial software. And I was trying to learn how to use the financial software so I could do better financial modeling for our business. Because I took care of all the money, bank financing, equity, whole 9 yards, the budgets. And he says to me, what are you doing? And I said, I'm studying for the bar. I wasn't really studying. I wasn't paying attention to his class. I was studying for the bar. And he says, you're studying for the bar? why don't we go to lunch? And he took me to lunch and he says, well, what are you doing in your business? I said, right now I'm just trying to raise money for our deals. And he said, oh yeah? With what paperwork? Who wrote your paperwork? Did you do it yourself? And I said, what paperwork? And then that's when he kind of said, well, if you're looking for investors, then you're in securities and you need to follow securities law. And he was very kind about it. And I said, no, I don't think that's what I'm doing. Yeah.
So to quick pause, just a quick tip, gold nugget, whatever. We always preach, like Casey was saying, always use other people's money. But if you're using other people's money, you have to have paperwork. And if you're not having paperwork,
and the amount doesn't matter.
The amount doesn't matter.
You always have to have it.
The amount of investors matters.
Correct.
Yeah. So here, I'll give you guys a quick rule that's really easy if any of you are out there writing this down. There's a quick rule to know if you're entering into this, and then I'll give you a quick step on how to take care of these things. First, is there an investment of money? In other words, are your investors investing money, not credit, not time, but money? Mm-hmm. 2, are they expecting something in return on their money? That can be interest on a note, it can be a preferred return, it can be equity in the deal, whatever it is. 3, there's more than one investor, just more than one. And 4, all the efforts are through a promoter. In other words, your investors are passive. And if you hit all 4 of those points, then we step into, okay, now what do we have to do to make sure we're treating those investors properly, both ethically, and under the law.
Right. That's a super easy, good rule of thumb. I mean, those are like good pointers to remember because.
What, follow the law and not be an asshole? Good tip there, Casey.
No, because for example, some of us might have, like our parents want to invest with us, or grandpa wants to invest with us.
Sure.
And to us, it might just seem like a personal relationship. Oh, we'll just, have it against that. But what if they what if they wanted to pool with the rest of the family?
Right.
And you don't think about it that way all the time because it's like, well, we have a personal relationship, it's not a big deal, but it does matter.
And those are the most dangerous relationships, right there. Those are the most because those are relationships you really don't want to destroy, right? You especially don't want to destroy those relationships over the money. So the easiest thing to do is to just put things in writing. And so I'm not looking for people who are raising, $50,000 from their parents and their Uncle Tom, to call me and spend a ton of money on legal fees. I'm not looking for people to call me for that, but I am looking for them to take a couple steps. And it's something I call the 3 Ds: disclosure, disclaimer, and details. You got to give all the details related to the investment opportunity. They got to disclose all the liabilities, all the risks associated with the investment, and they disclaim any liabilities. So disclosure, details, and disclaimers, that will put you in the right direction of raising money if you just take those steps and put that down on paper.
Those 3 Ds, are you doing that before you even have the initial conversation? Because again, I'm not an expert on anything actually, but when it comes to certain aspects,
you're an expert on being sexy.
but because I know in certain types of raising capital, 1, they have to be accredited, or 2, you have to have a prior standing relationship before you can solicit those. How does that play into the world of the 3 Ds?
So we're taking this to another step, right? So the 3 Ds are really that's the basics. That's like, hey, I want a couple of my friends and family to invest with me. What do I owe them so that they're making an informed investment decision? We start with that, right? But then we get into the rules. And one thing I want to say is there are a lot of rules. They can be complicated. So something you might want to do is just kind of figure out, who are my investors? Are they accredited? And an accredited investor is somebody who makes $200,000 a year as an individual, $300,000 a year as a married couple, and has $1 million in net worth exclusive of their primary residence. So these types of people, these accredited investors, the law doesn't protect as much. Because the law really is looking to protect the little guy and make sure they're not getting ripped off. They're not losing their hard-earned
So if you
money.
are a little guy, can you participate in these type of crowdfunding efforts?
It depends. It depends. If you go on to a crowdfunding website. They'll tell you right there if you can participate in those kinds of deals, whether you're accredited or if you're unaccredited. And then if you're a fundraiser, if you're trying to raise the money, then generally speaking, if you're not advertising for investors, and that's the key, if you're not going on Facebook and saying, hey, I'm looking for investors, if you're not going on LinkedIn or putting a billboard on the side of the road saying, hey, I'm looking for investors, then what you can do is you can take up to 35 unaccredited but sophisticated investors.
That doesn't seem vague at all.
So,
well, sophisticated's a little different.
Right. So
have you been in the real estate world?
Well, it is a subjective test
Right.
that you, as the fundraiser, have to look at objectively, which is really hard when you want somebody's money, because you want to say like, oh yeah, you're definitely sophisticated, you're good to go, but you have to objectively look at the subjective test. And what we're looking at is, does this person understand the risks associated with investing? That's the test. I know it's not very clear.
But you can have up to 35 of those?
You can have up to 35 of those.
What about a mixture of that plus accredited, or does it matter?
Yeah, no, it does. That doesn't matter. The deal is that you can have as many accredited investors as you want.
But only 35 unaccredited.
Sophisticated, yeah.
Sophisticated.
So long as you're not advertising for those
So
investors.
if you're doing a $100 million deal, you can have 35 Ryans. I'm not.
You're not accredited?
No, I'm PO. But you can have 35. So say you have 35 people and they all want to put in $1,000.
Yeah.
But then you've got like 10 other people that want to put $100 or $1 million each or whatever.
Yeah.
I can't do math. That's why I'm not accredited. but you can build a structure or something like that.
Right.
Yeah.
Exactly. And there's a bunch of rules. And before we end this, I'll tell everybody how to get a chart that will help them look at. They can look at the chart and go, hey, okay, I understand what rules apply where, what I'm able to do under what law. And we're talking about federal securities laws. If you pick any one of these federal securities laws, you will be in the clear. You just got to follow the rules.
So this is why earlier I was talking about like not needing to know, well, before we started, like not knowing what you do, because when it comes to when I hear federal security laws, I'm thinking voodoo magic, hire somebody else, because I don't know.
Sounds the same.
It's the same thing, right?
Well, and this is why this is like one of those things where I feel like we always want to know everything, and we play a lot of roles and we wear a lot of hats in real estate investing, right? Like all of us do, and we kind of know how that feels like. But this is one of those things that I don't even like. You have to have a baseline for it, but you're always going to want to hire someone like
Absolutely.
you because I think you had mentioned like, in the crash like of 2008, 2009, people that weren't protected or didn't do these types of things correctly, I would imagine there was a lot more target towards them.
They're the low-hanging fruit too, right?
Right.
Somebody like Bernie Madoff, who's a bad example, right? Because he ripped off.
Oh, he was my hero. Just
You need to
JK.
get your hero should be like, I don't know, Abraham Lincoln.
You should have different heroes. Okay.
Yeah, I'll get a list together for you.
Okay,
We'll talk about them later.
That's the other service.
Yeah.
I'm a lawyer / life coach.
I'll tell you who to look up to.
That got you?
Yeah, it did. Yeah, that's a whole other story, but for another day. So no, the thing is, what you really want. I don't even know where I was going with.
Let's change gears now to life coach because we all need it.
I will say, I'll pause this, is like, when you do hire a life coach and the first thing they do is burst out laughing, they're probably not the right
Probably
fit
not gonna be the
for
one
that
for you.
role.
So let's stick to law.
Let's stick to law versus life coaching.
Deal. All right. So the thing is, what I try to explain to people is like, I'll use another example. I'm trying to think of like a non-controversial person. Okay, Warren Buffett. We'll use Warren Buffett.
Never heard of him. It's so easy.
throwing her off.
It's so easy.
It is.
Anyway.
I'm sorry. I'm an easy target. I'm the best audience you could ever have. You take me to a stand-up like comedy special and just have me and it will be all good. But anyhow, so Warren Buffett, say you have Warren Buffett and Warren Buffett has committed securities violations, right? Warren Buffett has the capital available to himself to defend himself. He can put up these big walls, these big legal walls. He can hire the best legal minds out there to defend himself. It's not low-hanging fruit. you, a real estate investor who took, a couple $100,000, a couple million maybe of your friends and family money, if you didn't do things right, you're going to spend all of their money on defending yourself against the SEC, against the state. I have represented clients who've gone before the Department of Securities here in Texas, and it is no joke. I mean, they send subpoenas that are 10 pages long and like literally turn you upside down and shake you. I recently had a situation with a client who was subpoenaed both by the FBI and by the SEC, and it was all because of one tiny little disclosure thing. We were able to get them out of it, but and that's not what I do, but their team of defense attorneys was able to get them out of it, and it worked out fine. But you don't want to go through that stress.
Now, is that because they didn't have the proper paperwork on the front side?
No, it was because they didn't make a disclosure in the paperwork.
Okay.
And it kind of started a chain reaction of things. But it ended up turning out okay. But don't spend the legal money on doing that. And so what I tell people when they're in this situation, they say, well, why do I need you? Can't I just do this myself? Or what if I just ignore the law? I say, well, you can pay me a little bit of money now, or you can pay me a lot of money later to clean it up. Right. And that's really what it comes down to.
In the services you're talking about, and again, yes, we've been talking, but it's still like, but you're talking.
I'm glad I'm being so clear and articulate.
No, you're doing perfect. It's just, I'm a me head. But we're talking about deal specific.
We're going to coach you on that later.
Thank you, I appreciate it. But we're talking about deal specific. Yeah. We're not talking like putting a fund together to do, that's a completely different thing. But we're talking about like, if I want to do that $100 million deal and I'm raising money for this specific deal, or you just said anything? Anything.
So I don't just represent real estate entrepreneurs. I represent real estate entrepreneurs who are doing syndications, multifamily, self-storage. They might be buying one single property. I also represent a lot of clients who are doing real estate funds.
Right.
I just did a big mobile home park fund, so there was no specific property involved. They just, hey, we're going to go buy mobile home parks with your money. We're raising, $25 million.
So is that the one that, and again, not to give sticker shock, but like, and I personally have never been this, but I've been in two offices I've been in one office that did it twice, but it was like a $40,000 to $50,000 lawyer fee to set up the fund.
No.
Is that something, you know what I'm talking about?
Yeah, I do.
It's like a fund thing.
So it's not like a fun thing though, because we don't differentiate, for our services, we don't differentiate between a fund and a syndication.
Okay.
If you're doing a fund and you come to me, whether, and we've talked about, I have some pretty famous clients. I don't care if you're one of those famous clients or you're Ryan Harper from Propelio. You get the same. No, you do. And that
better
sounds
get
like
more. I thought we had a whatever
relationship, but like.
That's funny. Your entourage is shaking their heads over here.
I embarrass her frequently. It's okay.
But I like that. I like that you say that, because a lot of times it's like I would think, well, who am I? Like, I don't have anything big, but I might still have a deal that makes sense to come to you for.
Right. Yeah. And I don't want to make this sound like a commercial, but we charge like between $10,000 and $20,000 essentially, depending on what you're doing.
But so like for a $250,000 deal, it might not make sense unless that deal is going to net like $800,000 or something.
Well, it's not even that. If you're going to do a $250,000, let's say you have to raise $250,000, we have solutions for that, and it's a smaller PPM, a smaller whole deal that doesn't take us as long. It's not as big. It's not as overwhelming for your investors. We understand that, so we have solutions for that are well below $10,000. It's really, where we get hung up is, hey, are you raising more than $500,000 and do you have more than 5 investors? It's at that point in time we have to really have a sit down and say, look, you need this paperwork, and here are the reasons why.
And on something like that, and is it good to have the paperwork and a retainer, regardless if I'm going to the #1 voodoo magic lawyer, Jillian Sidoti? Should you have the retainer on the back end as well?
No, we don't take a retainer on the back end. And as a matter of fact, part of what we do is we do your deal for you, and then if your deal falls through, we write the paperwork for the deal and the deal falls through, we'll rewrite the paperwork for you at no additional charge for another deal. And we give you 6 months of ongoing legal support.
That's crazy,
because
most attorneys we're like, oh, you sneezed in my direction, that's a 15-minute billable.
Yeah, we don't charge by the hour. We charge a flat fee. And again, I don't want to make this. I want to make it valuable. But that's what. But to say that to the audience, what I want to say to them is that that's what you should be looking for in your attorney. That they charge a flat fee. That they provide some kind of add-on service. That they're not going to just leave you high and dry in case there's a problem. That they're going to do your filings for you, because there's not just the paperwork, there's always also filings that have to come along with that. And you want to make sure I'm getting everything. And if anybody out there wants to contact me for like what somebody should be looking for in an attorney, they can do that.
It sounds like a good rabbit hole to go through.
Yeah.
But first, let's take a quick break. Real quick, I do want to get this disclaimer out of the way because we haven't yet. We're not attorneys. You are attorney, but you're not providing legal counsel.
Yeah.
You're only providing entertainment purposes.
You are only here for entertainment, my lady.
I'm like a monkey.
Anyway, we'll be right back, and we're going to get down to like what you should be looking for when you're trying to pull money together from your lawyer.
Yeah.
The Propelio Academy, an all-in-one education resource for training in wholesales, subject to wraps, short sales, flips, rentals, BRRRR, property management, and more. Go to propelio.com/academy to get your scholarship today. Propelio.com. What does Propelio offer? Lead generating websites, access to true MLS comps, off-market lead lists, and deal alerts. Get them all today at propelio.com. Hey, welcome back. We've got Jillian Sidoti in, the voodoo magic attorney that deals with crowdfunding, pulling together money. It's not her money, but whenever you're pulling other people's monies together to do a deal or a fund, you have to have the proper paperwork. And before we went to break, we kind of mentioned, or you mentioned, like, hey, the step-by-step things to look for.
Right.
So let's get into it. What are those things that, so say I'm an idiot and I do not hire Jillian Sidoti.
Yes.
How do I filter out a second place lawyer?
And they are second place, by the way.
A second place lawyer. I love it.
Heard it here first.
Sell it, girl.
Okay, you want to find somebody who's going to put together your LLCs for you. They're going to put together your PPM, the private placement memorandum. That is the story of the investment. That is saying, this is what you're investing in, investor. These are the risks associated. These are your distributions. You also want to make sure that if we're in real estate, most likely we're using an LLC, and you want to make sure that the attorney's providing an operating agreement, which tells you how the company is going to run. The fourth thing is a subscription agreement. And the subscription agreement is the agreement between you and the investor, saying the investor agrees to everything and all this other paperwork you gave them, and now they're agreeing to invest. Finally, you want to make sure that the attorney is going to file your Form Ds for you. And your Form Ds are forms that are filed with the SEC and the state securities board saying we're using this exemption from full-blown registration. And some things that we like to tack on that you might want to go and ask your attorney for are review my marketing materials, make sure they're compliant, help me if I have any questions after the fact. I want you to answer my questions for me, and just, simple amendments if they're needed.
So when you say marketing materials, are you saying marketing materials specific for pulling money together?
Perhaps. It just depends on what you're doing. I mean, there's a reason why someone like myself exists. And it's because this is a broad area of law that has, a lot of different ways to do things, but a lot of booby traps, essentially, where you can fall into a pit of, oh, I didn't know that was illegal, and I see that happen all the time. And there's a lot of misinformation out there. So you want to just make sure that you have a lawyer looking over your marketing materials and making sure you're not doing a general solicitation that might not otherwise be legal.
So on that note, I do have a question, because I think it's come up a lot with the use of social media and how a lot of people put the deals out there and they're asking for funding. Now, if you're looking for private money, like from one person, like on a deal, like I'm assuming that that's okay.
If it's just one person and you're keeping it to one person, you aren't in securities law. Remember, you need one or more.
Right.
I mean, you need two or more. So you need two more investors for it to even fall under securities law. So if you're just looking for a one-on-one investor, you're usually fine. Where people get in trouble in that circumstance is they're doing it on multiple deals and they're just being very risky with the rules.
Real quick, and I know we talked about in the first segment, but I really want to highlight that is, and I don't want to skip over it. If you have two or more lenders or two or more partners or investors, however you want to call it, you're in securities law. And again, that sounds way, way, way more robust than just like, hey, I'm buying a house.
Well, hold on though, because for example, what if you needed a first and a second lien position?
That's a good question.
That is an awesome question, and I'll tell you why.
That's why she's here.
No, I'll tell you why it's an awesome question, because there's actually, in most states, there's a self-executing exemption if you have a note that is secured by a deed of trust and is not fractionalized. So if you have a first and a second, that's okay. If you have a first that's fractionalized, not okay.
That's
that funny?
Really
What does
good
fractionalized
point.
mean?
In other words, two people on the same
lien.
So
yeah.
it's exactly what it sounds like. Got it.
Say it again, but slower. Just kidding.
Wow.
No, this is good to know.
Wow.
We're going to work through all these issues. Don't worry.
We take it for granted a lot of the terminology and stuff that we use. So I'm grateful for you like clarifying that. So honestly, because I think it can be, because to me that's like, well, I have two different lenders. That's different, but that makes a lot of sense. So the second part to my question there was because I was in a group and somebody said, who would be interested in pooling a bunch of money and just going to buy some apartments together? And it was like a very general question.
Right.
But a lot of people were like, whoa, you could be crossing a line just by that post.
You could be. And there's something, it's funny because general solicitation is like super blatant, right? It's like, would you like to make 8% on your money today? You know? And people go, yeah, sure, or no, that's illegal. You can't advertise like that. It's, first of all, there's several laws where you can do something like that, but you got to be within the letter of the law, and we can get into that if you want. But also, doing something like who would like to pool money together, there's a step below general solicitation that's called conditioning the market. And if you're like giving people the idea that there might be an opportunity to invest and you're being really blatant about it, the states and the SEC don't like that either. Now, can they really do anything about it? They can shoot, arrows across your bow is what they can really do. And I have had that happen where I had a client who had a website that said, we help investors put their money in multifamily deals in the Midwest. And it was just really clear that there might be some opportunity.
That sounds very blatant.
Yeah, well, no, because there's no offer. What's the offer?
Got it.
There's no offer.
Yeah.
So they said, listen, this is literally what, it was a state securities board, what they wrote us. Your website is not general solicitation. They acknowledge that. However, it seems you're conditioning the market. Cut it out.
And that's a no-go.
You shouldn't be doing it.
Okay.
Really what you should be doing to bring investors in, and forget law for a second, the most effective way to get people through the door is to build trust just like any other company. You don't invest in Amazon because Jeff Bezos goes out there and says, hey guys, we used to only sell books, but now we sell everything from A to Z. Like, do the math. Like, he doesn't go out and do those types of things. He shows you what he is capable of doing. And it's the same thing.
I'm gonna just real quick. I think that's honestly gold because a huge debate that's in the real estate space is, well, do I find the people and the money first and then look for the deal, or the deal first? And what comes first is a really big issue for a lot of people. So I like that you pointed that out, because you're basically saying, if you're building the trust and you're doing the work, like, people are going to come to you in person and build that relationship and say, hey, might you have something that I could be a part of?
It's always, if you don't build trust, you have nothing. I mean, I do this experiment all the time when I'm in a live event where I say to the room, who has seen on Facebook, LinkedIn, Bigger Pockets, Craigslist, wherever, who has seen an ad that says, I'm offering 18% low risk, guaranteed, safe and secure? Most people go, oh, yeah, I've seen something like that.
Or something,
yeah. And I go, okay, so all you keep your hands up. How many of you that have your hands up now, how many of you have invested? And those hands you can hear the whoosh of the hands going down. It's because it's not trustworthy. Right. It's not, there's no credibility there. There is no, returns are secondary to trust. Every single, and it's not even a close second, it's a way far second, and it might not even be second, it might be third, fourth, fifth. But returns mean nothing to the investor until you've built up that trust.
Yeah, absolutely.
So, and that's not legal advice, that's just
good advice.
That's life coaching advice.
You know,
honestly, I love it because that's how it should be, and I think we forget that so quickly.
Yeah.
And at the end of the day, if the trust is there when something does come up, that's when you can approach somebody and you're going to know. It's not like we aren't having, like, if I trust you,
right.
I clearly know what you have, maybe what you might be interested in placing, trying to find the right opportunities, and that should just be kind of a no-brainer. But in the world of social media, it's so easy to throw stuff out there to kind of gauge the market, I guess.
Sure, and there are ways to gauge the market without being super obvious. Like, I'm going to name drop if you guys don't mind.
Please.
Because this, every time he wants to do something, I go, I'm not going to recommend what you do marketing because you're clearly a marketing genius, and that's Grant Cardone. So Grant Cardone did a filing with me called, he did 2 filings with me called Regulation A offerings. Previous to that, he was doing 506C offerings, which were for accredited investors only. Mm-hmm. And then he decided to do these Regulation A offerings because he has a following of 6 million people, and he wants that 6 million people all to be able to invest with him. Well, his first marketing for that Regulation A offering, now mind you, he did a Regulation A offering. That means he can go out, he can advertise for investors, he can take money from anybody. But that's not what he did. He went out and said, here's why you need multifamily in your portfolio. And he gave you all the reasons. Here's why real estate should be your goal. His call to actions were very minimal in terms of invest now. He gave you all the reasons of why to evaluate your own investing life prior to making that jump.
And to be clear, you're saying that is the correct way to do it?
That is the correct way to do it because he was built, even though he could go out from the gate right away and say, hey, who wants to invest with me? I'm offering, blah, blah, blah % on returns.
So I do want to point out that in your bio, mm-hmm. it says, Jillian Sidoti is one of the country's leading experts on Regulation A. And then before we started, you're like, I don't want to talk about Regulation A.
I thought this was off limits.
Because this is the court of Propelio.
And now
you've opened up what is Regulation A.
Yes. Okay, so Regulation A is a mini IPO. And the only reason why I said that is because I wanted to give real value to your audience, and I wasn't sure how many of them were going to do a Regulation A. But a Regulation A is a mini IPO. It allows you to raise money from the general public up to $50 million using general solicitation. So
interesting.
Yeah, but here's the thing. I have a lot of people who call me and say, hey, I want to do a Regulation A, and I have and I hope this doesn't offend anybody out there, I have what I call a come to Jesus moment with them over that, which is that I say to them, look, are you really ready to do that? Because I just gave you an example of a guy who had 6 million followers on Facebook and is still working to build credibility amongst those followers in order for them to invest. So it's the same thing, right? You have to have already built up that credibility before you even consider doing one of these.
So would you say Regulation A is more for like the big boys or the bigger institutions? So if I'm just, because again, Grant Cardone, I just bought a jet. Mm-hmm. He's obviously a huge person in the real estate world. Like if you're just doing $100 million deal or whatever, even then you most likely don't need it?
No, not necessarily, because here's the thing. It's kind of it runs the gamut in terms of who will do a Regulation A. I have one of my great clients was a 27-year-old kid who was buying smaller multifamily. I call him a kid. I mean, I could be his not much older sister, right?
I was like, I don't even know where she's going.
I
don't even know.
You're learning. Yeah, this is Jillian.
Nice to meet you.
Oh, this is good.
So this 27-year-old gentleman
yes.
He wanted to buy smaller multifamilies in the Los Angeles area, and so we did a Regulation A for him because that was what fit for what he was doing, and it worked for him in what he was doing. So it just really, you just have to make sure it works for you. You can spend the money on doing it, you know, because it's more of an expensive process. It takes more time. You have to get approval from the SEC. There's a lot of things that go on there.
Don't look at me. I'm way above my head.
So really, the point of that I'm taking from that really is like you have to have obviously the costs associated with it, because I think what you're saying is you do have to take the time to build the trust with people that might be more distant from you.
Right.
In that kind of volume.
Right.
And that's why it's kind of maybe like, hey, do we want to go this route or not go this route?
Yeah, and so a lot of times what I'll say to people who come to me and are very eager to do one, I'll take them back a step and I'll say, listen, let's see how you are at advertising for securities in the first place. Let's do what's called a 506C. A 506C offering is a much less expensive offering. And it allows you to raise as much money as you want. You can use general solicitation, but you can only take in accredited investors. And if you can build trust amongst that crowd, it will transcend into the next crowd. So you want to start there, and that's what all of my high-profile clients start off with. Even if they come to me with a Reg A, I try to get them to do a 506C first, because I want them to have social proof before they go out there.
And speaking of social proof, and like you said, not to name drop, who are some other, if you don't mind sharing?
He took my question.
Oh.
Yeah, share.
Let's name drop.
We'll give you some credibility here. Like, who are some people you're working with?
Well, we recently did a deal for Flip or Flop Tarek El Moussa. We do deals for Than Merrill from, I think, Flip This House, A&E. We do deals for Brandon from Bigger Pockets. And we do, I'm trying to think. Now you I think that's a good list right there. We'll start with that. We'll keep that there. And I'm sorry if I've insulted you by not naming you. But you're very important.
You just weren't big enough.
You're right here.
You weren't big enough to be name dropped.
That's good. That gives some credibility, especially to knowing, because I think we're all kind of aware of at least that they're all doing business.
Yeah, no, and the thing is, like, we have some really, it transcends real estate. So if you're thinking about doing this for another business, like biotech, or we have a lot of film companies we deal with that are trying to raise money for their films.
So this
okay.
This again, maybe I just haven't been listening. This is for,
Probably.
You need to be doing this for any investment
business.
project.
No, the test is really super clear. It's those four things. Investment of money in a common enterprise with the expectation of profits through the efforts of a promoter. That transcends industry.
Because I think in the real estate investor niche, we think we're in the wild, well, I always say the wild, wild west. But it's like, oh, we're set apart, we're doing this. But at the end of the day, it's like, if you have an asset and you're pulling money together, the law is the law of the law.
Yeah, and some of my more successful Regulation A clients are biotech companies, actually. Oddly enough.
Okay.
Yeah.
Interesting.
So yeah, that have some innovative technologies that they're trying to get across the finish line, and so they go out there with a Regulation A to try to raise money for that. Yeah.
That makes sense.
It looks like we're up for another break. So again, Jillian Sidoti, not your attorney yet.
No.
This is for entertainment purposes only.
And value.
Massive
value.
Hopefully you're liking what you're seeing. Please drop some love in the comments, drop some likes. If you're not already a subscriber, give us a subscription of sorts. And Tommy, let's go to a break and we'll be right back. The Propelio Academy, an all-in-one education resource for training in wholesales, subject to wraps, short sales, flips, rentals, BRRRR, property management, and more. Go to propelio.com/academy to get your scholarship today. Propelio.com. What does Propelio offer? Lead generating websites, access to true MLS comps, off-market lead lists, and deal alerts. Get them all today at Propelio.com. Welcome back, everybody. This is Propelio. I'm Ryan. Next to me is Casey. And today we actually have the amazing voodoo magic lawyer of crowdfunding, Miss Jillian Sidoti. Earlier, at the very beginning of the show, you were talking about you had a chart of some sort.
Yeah.
And I'm assuming this chart replaces a lawyer. So what?
And teaches you how to do
the paperwork.
voodoo
Yes.
magic.
Yeah. It's
the formula.
Yeah. What's the formula?
Okay, exactly.
So what
It's a
was
tone.
that? How can I get that? How can our audience get that?
So if you guys all email me at crowdfundinglawyers.net, crowdfundinglawyers.net, put in the subject line helpful chart, and we're going to send you all kinds of free information. We're not looking to sell you anything. We just want to give you this information. It's hard to swallow. It's hard to understand. And so we have it all in a nice, easy to understand chart. So if you're like, can I advertise if I do this? And it's right there on the chart.
Oh, that's awesome.
Yeah.
Sounds like
Very
it's
cool.
like all the stupid questions you got. You're like, let me just put it in a chart. Then I can work my
That
form.
would be actually an accurate statement.
Come on, we all start somewhere.
Well, because you
Yeah.
said before you don't bill hourly, you bill by the project.
Yeah.
So you're like, oh, how can I get people to stop calling
Beautiful
me?
case of automation.
Right.
That's great.
Well, it's not just that, and this is a true story. When I first started doing this area of law, one of the things I did was I made contact with all 50 states securities boards. I was pregnant with my first child, and I sat there on my couch, sick as a dog, reading every single state's securities laws, and I made little Excel charts for myself so I knew what
you
the
sound
laws
like
were.
you know how to party. Is what that sounds
I
like.
was pregnant, so there wasn't a
I'm
lot
sick,
of partying.
so I'm gonna read some freaking law.
But you know
makes
what's funny?
sense.
She's not
Charts.
lying. Like that's how she is, though.
Someone once looked at me and they're like, "You look like you could build bombs in Excel," and I was like, "Thank you, thank you for that." I feel like I met my soulmate here.
Like you give this one data, she's like, oh my god.
What does it mean? No, I think that's super helpful because I think as we all kind of advance, through our careers and we want to do the bigger deals, which is on everyone's mind, multifamily is something that is a lot more prevalent now. You hear everybody getting into it.
Oh, yeah.
Everyone wanting to learn it. And I think in this world with social media and how we connect, and honestly, I feel like most of the friends that I have are all on Facebook. I know them in real life because it's just how we connect.
Right.
It's so easy. I used to work for a company, true story, that did a lot of fundraising. I will not mention their name because I'm pretty sure they're in lawsuits at this point because of the PPMs and how they marketed and how they took to things. And it's like that one sentence where they said what they were going to do and then they didn't quite do it that way, and now they're facing trials and a whole bunch of stuff.
Yeah, and let me tell you, that's actually an awesome story, but the bigger risk is not doing it at all. At least they had something, right?
Right.
So
You mean in terms of paperwork?
yeah,
Right.
if you have nothing, then you're really heading down a road.
Yeah.
And I'll tell you something. I mentioned I have defended people in the state of Texas before. I had a guy who
was that?
I'm not going to name names. And I think they were in Lubbock anyhow, so it doesn't matter. So.
Because Lubbock doesn't matter.
No, in other words, you
poor
might
Lubbock.
not know who they are. Well, because you're not in
I'm kidding.
Lubbock. Oh
I'm
my
just
gosh.
You don't know anybody. Anyway, go on.
Now that we've had that uncomfortable moment, let's.
You presume too much. I was not uncomfortable at all.
For me, it was.
Anyway, I just want to say thank
And then
you.
there's Casey.
Thank you to our latest subscriber. We got a subscription.
Oh.
Somebody subscribed to our YouTube channel. So
Obviously
if you're not
because of
subscribed
Jillian.
yet, click the button and subscribe.
You know,
Anyway,
I don't want to be
lawsuit.
counting, but that's gone up 4 since I've been here.
Woo! Of
I know.
course it has.
This
She
is-
does do magic.
This isn't live, so it's kind of like not really. Oh, I'm sorry. I mean,
So, again.
Tommy, just edit that out. Anyway, you were representing a client in Lubbock, lawsuits.
yes. Okay, yes. And this client was very scared. He was scared because he got this massive subpoena from the state securities board in Texas. Somebody had called on him and said, this guy is operating, he's taking money from investors and he doesn't have any proper paperwork, and I think he's committing securities fraud. And so he called me just in a complete panic. Like, I don't know what to do. All my investors are really great people, and I don't know what to do. So the thing we did was I said, look, this is what we're going to be responsive to the subpoena. We're going to give them whatever they want. But then beside that, what we're going to do is I want you to call your investors in. He didn't have a lot of investors. I want you to call your investors in one by one. I want you to present them with the paperwork I'm about to give you. I want you to tell them to sign it. I do not want you to backdate it. They are to sign it the day to date it this day they sign it. And then, we'll let the chips fall where they may. We'll present that to the state of Texas and see how they take it. There's two major things that happened there. The first major thing that happened was he had an investor come in, look at the paperwork, it said, these are all the ways you could lose your money, this is what I plan on doing with your money, et cetera, et cetera. Investor signed the paperwork, left the office, called him 20 minutes later and said, I'm so impressed that you took these steps that I would like to invest more with you. So this paperwork is not, it does what it's supposed to do, and it also shows your investor that you care enough to tell them the truth, to be honest with them, to spend the money, to spend the time. The second thing was the state of Texas acknowledged the effort he put in to making the situation right, and he didn't have any problems after that.
The biggest thing I've gotten from this entire conversation so far is how big of a minefield this type of world is. Because again, in the real estate world, we feel like we know what the hell we're doing because we deal with contracts left and right. We're always inking this, 1 page that, 7 page that, and we're just, wild west. Oh, you want a pink hat on clip? Yeah, we'll write that in. But when it comes to the I don't even know the voodoo magic aspect of it, but the 2 or more lenders, partners on it, you gotta have the paperwork. It's
good policy to have good paperwork between you and investors. Anyhow, I mean that's just good, solid policy to have. Not to go by the seat of your pants and just have nothing. It protects you and the investor.
I do have an easy question for you, and I probably should have asked it, 40 minutes ago. But what's the difference between syndication and a fund?
Oh, that's a great question.
That's a good one.
A syndication refers to a single asset, usually. So a single multifamily, a single self-storage, a single film. Like I said earlier, I syndicate films all the time. But it's a single asset. We're taking this asset, we're selling equity investments in this particular asset. With a fund, it's saying, it quite possibly is saying, we don't know what assets we're going to buy, but we know that these are the types of assets we're going to buy. So, for example, all of my Regulation A offerings are just that. Some of them are multifaceted, we might buy self-storage, office, multifamily. Some of them are really straightforward. We're just going to buy multifamily. Some of them are lending funds. Some of them are note buying funds. It's really, a fund is really when you're looking at more than one asset for acquisition, as opposed to a syndication, which is truly just that one asset. We're concentrating on the risks associated with that one asset.
And as far as the type of deals, because I know the popularity right now is syndication on multifamily type deals, commercial deals. But I'm assuming if you have a big enough house or single family, if it's a $10 million, you could probably do a syndication.
I've done syndications on big single family deals. For example, big Airbnb flips, or not flips per se, but big mansions or bigger homes that were going to be used for Airbnb. We might syndicate something like that. I did a couple of those, for example, in Las Vegas. Most of the time when we're doing single family, we're doing a single family fund. That's what I eventually push people into. And with good reason, because it's a hamster wheel. If you're going out and looking for one private lender per deal, you're constantly asking for money, giving money back, asking for more money.
You're never actually finding a new deal.
You're
always looking for money.
You're always looking for money. Or you find a new deal and then you have to start the process all over again. So I say stop the hamster wheel and just pull all the money into a fund, spend it as you need it, hold on to it for 5 years, and then deploy it back out to your investors. That's really the right way to do it. The investors don't want their money back either. If they're really, truly good investors, they want you to take the money, work with it, and not give it back to them for some period of time. Getting it back every 6 months is not any good for you, and it's not any good for the investors.
I like this. Well, because this isn't a strategy.
Good.
Well, thank you. It's not a strategy that we really talk about. Like, again, it's like we play all of these roles as investors when we're starting out and we're building our business. And something that is driving me crazy is just so-and-so wants to put in a little bit of money, but it's not enough really to take down a house. Okay, so I'm starting to think, okay, well, I can put that into maybe mobile homes, or I can I can fit you here and I can fit you here. And it gets to a point where, and I think Grant said it really well, in how you present yourself to your lenders is that you have to say, listen, I can give you this on these terms. This is what I'm doing. But it would make more sense to pull it all together, and you can say that to everybody and just put it in a place.
That's another thing that I think real estate entrepreneurs lose focus on, is that they need to control the deal. If you want to control the deal when you're buying or selling a property, why wouldn't you control the deal with your investors? Control the deal. Don't let your investors control you. If you say to the investors, what do you want? They're going to be like, well, I'd like 25% return on investment.
I want 15% return. We're like, what?
And an island in the Caribbean and a private jet. Like.
Or they want whatever is better than what they're getting now. And of course, everybody wants that. And so.
I think that, again, this is huge. There's so many nuggets that are being dropped throughout the entire time with you, but like I don't think I've heard that one before.
That's
because we hear all the time, if you're dealing with wholesaling, control the contract. If you're dealing with the house itself, contractors control the deal itself. I don't think I've ever heard here in Propelio, you need to control your investors as well.
You should absolutely. The number one thing you should be controlling is your investors. If you don't control every aspect of their expectations, you've created a monster for yourself, and you have only yourself to blame. So what I mean by that is you control the returns, you control the distribution schedule, you control the reporting. So for example, if I don't tell you when I'm going to report back to you, you're going to check in whenever the heck you feel like it. And
daily, hourly,
whatever. You're going to be a thorn in my side while I'm just trying to make this project work. I can't be dealing with that, right?
Well, because I know, like title companies, like a friend of mine, she was ill or something, and literally investors blowing her up every single day or every single hour.
Right.
She's like, I just got to take a shit. I mean, come on.
I mean, I had a lender too who was like, how are we doing on this? And I'm like, you are one property. Like I want to get and I am.
You want to give them the best service you can.
Exactly, but you're right. We have to be out doing our job, and I think if we can set that expectation, and if we can tell them that's how it's supposed to be.
Can you just stay here?
Yes, I can. I'm so glad to add value.
But honestly, that is probably my favorite thing that you've said today.
Yeah.
Hands down. It honestly makes me start thinking about how to.
When she was talking all that smack about all those people before we.
Stop it. Stop. But yes.
Keep your mouth shut. That was attorney-client privilege. It goes that way.
I don't know if that works though.
I'm going to make it work that way.
Oh, because you're the attorney with the beauty magic and I'm the idiot. And I'm like, okay, you're right.
So I do have a question very quickly, and maybe you're not the one to answer this, because if we're controlling our deals, we're also contributing or controlling how we set up those types of funds with investors, right? So if I have 5 people that want to invest with me and it's little pieces, I can put them into a fund. And I can basically just say, hey, this is what I can give you. So then it's not deal specific. Is that correct? Or
it's never deal specific.
Okay.
So you know what type of deals you're going to buy,
correct,
right? You know you're not going to buy a deal that's going to make less than 10% ROI. You know that. So and I try to teach people how to do this all the time, because I really want them to go out with this foundation, because you can make. This is where most people make the biggest mistakes. You always want to start with number one, and number one is you. You want to start with, how much money do I need to make this worth my time? Because the minute you lose motivation, everything's lost for everybody. Now, that's not to say you're motivated by money, but there has to be an element of that. Well, some people aren't motivated by money.
Well, you have to be able to take care of yourself.
You have to be able to take care of yourself. You can't be worrying about money, because if you're worrying about your own, your own backyard, you can't certainly worry about what you're doing with your investors' money. So you got to start with number one. So this is how I tell people to work. Figure out how much you need to make on a deal. Then you figure out how much the deal's going to make. You take the difference between the two of those. If the deal obviously is making less than what you want to make, it's
not a good deal.
Right. But we assume only the deal's going to make just as much. Then that gives you the difference. The differential is not what you offer your investors. The differential, you then take out a contingency. Whatever's left over after that is what then you can offer to your investors. And you can confidently say, I'm going to give you an 8% preferred return plus 50% of the back end. And that's how you
And the back end would be whatever you've already taken out for your pocket.
You've already taken out what you need to take out in a variety of forms, like whether it's through fees, whether it's through that equity split, whatever it might be, you've already taken what you are supposed to get out.
So just so again, we don't have to get number, but like I want X, and I know my investors, they're going to get Y, that whatever 8%, 10%, whatever it is, and whatever that difference is, then it's like, oh, well, 50-50 that, or whatever you structure.
You can structure it so many different ways. I mean, I have all kinds of spreadsheets that you can use to figure this out. But the number one moral of this story is if you don't offer your investors the right number, then you're going to lose them day one that you don't pay them what you told them you were going to pay them. Right. And again, another example I always do, I could offer you guys the same exact deal. I'm going to pay you 10, I'm going to pay you 8. The deal only makes 9. I can only pay you 9 and I pay you 9. You're happy because I just paid you 9, more than I told you I was going to pay you, and you're ready to sue me.
Because I was told 10.
You were told 10.
So it's really making sure you understand what you can offer. And the basis of that is I want to know what I want to make. I know what the deal is going to make.
Right.
I'm going to take out the difference as contingency.
Right.
And then that's how you're basically going to determine
what you're going to offer your investors.
them.
And then you control the deal from there. This is what we're offering. Here's my paperwork if you're interested here. And then the minute the investor goes, well, that's not what I want this, they're not the investor for you.
Right.
And you need to move on. There's
bye.
Yeah, bye.
That's
no,
true.
but there's 330 million people in this country. By some accounts, 10% of those people are accredited. That's 33 million people that are accredited investors in this country. If you can't find some of them, then you've got bigger problems.
Learn how to network.
Yeah, you got to learn how to network, whether it's online or in person. You need to learn how to network.
Well, I think we're coming to the end.
Oh.
My biggest takeaway on this, other than the look out for number one, is you got to have the right paperwork.
Yeah.
And I think everybody knows that inherently, but again, I keep talking about the real estate being the wild, wild west, about how we're always running and gunning and just like, we'll just, white out this, Sharpie this, just mark it up. But again, the two words, securities law, I don't know why, but that just seems a lot more heavy than just everyday real estate.
No, and it does, and it is, and it's like, I tell you, I had that same experience. I had that experience where I was like, oh my God, I'm breaking the law. Oh my God, what am I supposed to do? Oh, I had that same kind of breakdown. And so, one thing I really try to do is be empathetic towards that and offer as much free information out there on the interwebs as possible.
I don't
So,
know why it makes me laugh
Casey,
every time.
final questions, final thoughts.
Honestly, my final thought and my biggest takeaway is honestly about controlling your money too. That's huge for me because I think we always say don't be a desperate buyer. Don't be a desperate anything.
Yes. Oh, yes.
And yet we do, and we're like, man, I don't have the cash, so I'm gonna offer you like 14%, and please don't mention points. And we kind of throw it out there, but we aren't looking out for ourselves, and we aren't kind of working with that confidence. So that was my biggest takeaway for myself and my business. And honestly, in terms of the hamster wheel, and maybe pooling the money might be a completely different ball game. So thank you for sharing that.
Oh, you're welcome. I'm glad I was helpful.
As far as you, is for our audience, what is the main takeaway? I mean, I know you just said look out for number one.
Yeah.
If that's the takeaway, that's the takeaway.
Well, I think it transcends. By looking out for number one, you are doing ultimately what we want you to do, which is looking out for your investors, being a good steward to your investors' money. To me, that is tantamount to anything else. Having good communication with them before, during, and after the deal. That is what you want to do. And even if things are going poorly, you need to be having good communication with your investors. They trusted you. They wrote a check to you on a chance. you need to be a good steward of their money, and you owe that to them before, during, and after the deal. It all starts with making sure you're making the right offer to them, and you can't make the right offer to them if you don't know what you want.
So on that, what I'll say is you need the right paperwork. If you are looking to do these type of things, you need to contact Jillian. That being said, how can people get a hold of you?
Yeah, if you just want some quick information,
How can they hire you?
They can hire me at crowdfundinglawyers.net.
They can hire you?
They can hire me. Hire 'em. It means to life. Like,
You gotta love it. It's like, hey,
she'll do
pitch.
such an entertaining hire.
I think you need to edit that in post.
Nope, not gonna happen.
Rude. So go to crowdfundinglawyers.net. You can make an appointment with me. If you just want some free stuff, it's all over crowdfundinglawyers.net. And if you want some really great marketing and legal free stuff, go to privatemoneyrockstar.com.
And then to get that chart, how do I get that chart again?
Go to, send me an email at crowd@crowdfundinglawyers.net. And you've got to put in the subject line, helpful chart, and it will send you all kinds of free stuff.
Excellent.
Awesome.
Casey, what are you looking for? How can we get a hold of you?
Oh yeah, I forgot about all that.
Yeah.
Honestly, if y'all need help partnering on some deals in Dallas, we're happy to help partner with you, take them down for closures in particular, or if you need transaction coordinating assistance with paperwork, because a lot of people don't know how to handle that or know what you need, give me a call. You can reach me on Facebook. My name should be tagged in this, and you can follow me on Instagram at Casey Buys Houses.
Woo, I'm Ryan. This is Propelio. Thank you so much for being here today. As far as what I need, if you've got deals, send them to me so I can send them to her and she can pay me a referral. But I'm
True
also
story.
trying to build out my LinkedIn a little bit more. So if we're not connected, look for me, Ryan S. Harper. I'm also a LinkedIn live beta tester. So
Woo!
Wow.
you can go
You just
This is
watch
a
one of those.
Sexy group.
so many.
You're like, Jillian's like, I work with Grant Cardone. I'm like,
I'm on
are
LinkedIn
they
Live.
a beta tester for LinkedIn Live? No. Anyway, thanks again, everybody. Thanks for being here. Really appreciate it. Please give us a like. Please give us a share. Drop a comment. All those things. Tommy, take us out. One of these days.
Propelio TV is sponsored by Noble Mortgage and Investments, Batchkip Tracing, Think Multifamily, CreativeCashflow.com, and Lifeiner.
Want to keep up with the latest Propelio TV daily? Be sure to subscribe and click that bell.